The Forex markets are extremely popular and some of the most liquid markets you can trade. For me, the Forex market is my bread and butter, and if you want to learn more about how I've traded for the past 2 decades, check the description box down below. So let's get to know this market a little bit better. Forex is just short for foreign exchange, and it's basically changing one currency into another. You're probably familiar with this if you've ever been abroad and had to use a different currency than the one that you're used to. So this is basically what we're trading when we trade the Forex market. We're trading amounts in one currency for another currency. Therefore, the currencies are usually quoted and traded in pairs. That means 2 currencies, and the price we see is the exchange rate between those 2 currencies. In other words, how much one currency is worth in terms of the other currency. Now, currency pairs always have a base currency and a quote currency. Another way to think about this is that the price you're seeing in the market is the price of the base currency given in the quote currency. For example, the currency pair euro against the US dollar is giving us the price of €1 in terms of dollars. So in this case, €1 is being quoted as $1.0712. So if I want to change my dollars into euros, in other words, buying euros using dollars, that's the price I'm going to pay. So in that case, what happens if the price goes up to $1.0812? Well, just like when you're buying something in the shops, it means that the euro has got more expensive. It's gone up in value against the dollar since you need to pay more dollars to get €1. We could also say that the euro has appreciated against the dollar, and if the price has gone down, we could say that the euro has depreciated against the dollar. On the other hand, you could also say the opposite for the dollar. So if the euro has appreciated against the dollar has also depreciated against the euro, and vice versa. And so this is because the movements in the currency pair aren't just determined by one currency, but by both of them. It could be that something on the US side has affected the dollar, or something on the Eurozone side has affected the euro, or a mix of both. This is one of the great things about the Forex markets and what makes them so good to trade in, because there's more movement happening in both directions due to the influence of both currencies appreciating and depreciating. Now, the values of the different currencies can be affected by a whole range of different factors. However, some important ones that you should pay attention to that will cause the most movement in the prices are central bank actions, such as interest rate changes or other actions affecting the money supply, fiscal policy from the government, economic data for the relevant economy, and investment opportunities. So it's always a good idea to keep an eye on the economic calendar so you know when these sorts of releases are coming out. And if you don't know about that yet, watch this video over here next.